Ladies and gentlemen, good day and welcome to the LIC Housing Finance Q3 FY22 earnings conference call hosted by Axis Capital Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Praveen Agarwal from Axis Capital. Thank you, and over to you.
Thank you, Stanford. Good morning, everyone, and welcome to this earnings call of LIC Housing Finance. We have with us Mr. Y. Vishwanath Gowd, MD and CEO, and Mr. Sudipto Sil, CFO, to take us through the results. In the initial round, we would request Mr. Vishwanath to give us an understanding of the quarter gone by, and then we'll open the floor for Q&A. Over to you, Mr. Vishwanath.
Thank you, Praveen Agarwal. Thank you. Very good morning to you all. Very good morning to all of you once again. And I also welcome to the post-earnings call of our LIC Housing Finance Limited. As you are aware, LIC HFL declared its Q3 FY22 results yesterday. Before beginning, I wish you and your near and dear ones a very happy and healthy New Year, because we are meeting first time in the current New Year. This quarter under review witnessed a third wave of COVID-19 due to the Omicron variant, which resulted in intermittent restrictions in some parts of the country. However, the situation got normalized, and now with the expectation of the pandemic receding, it is expected that the business activities will strengthen further in the Q4. All key indicators have shown improvement during Q3 over the previous quarters. The financial highlights of the quarter are as follows. Total revenue from operations 5054 crore as against 4907 crore for the corresponding quarter of the previous year, with a growth rate of 3%. Outstanding loan portfolio stood at 2,43,412 crore against 220,197 crore as on 31st December 2020, reflecting a growth of 11%. Out of which, individual home loan book reported a growth of 15%, and now it comprises 80% of the total portfolio. It is up from 77 1 year ago. Total disbursements for this quarter were 17,770 crore as against 16,857 crore in Q3 FY21, with a growth rate of 5%. Out of that, the disbursement in the individual home loan were 15,341 crore as against 14,511 for Q3 of FY21, with a growth rate of 6%. Also, we have achieved 135% of the pre-COVID levels in terms of Q3 disbursements when we compare it with Q3 FY19-20. On the net interest income front, NII was 1,455 crore for the quarter as against 1,281 crore in Q3 of FY21, showing a growth of 14%. Net interest margins for the quarter stood at 2.42% as against 2.36 in Q3 of FY21. Profit before tax for the quarter stood at 961.85 crore as against 969.64 crore. Profit after tax for the quarter stood at 767.33 crore as against 727.04 crore for the same period previous year, reflecting a growth of 6%. During the quarter under review, disbursements continued its strong momentum even on a sequential and year-on-year strong quarters. With the individual home loan segment, the disbursement growth is clocking 34% for the 9-month period. The growth has been across all geographies, especially in the southeastern, southern and western, and also supported by northern, central and eastern regions. The canvas of growth gives us a lot of confidence of an overall pickup in economic activities, as well as a strong and sustained rebound in the consumer sentiments. In terms of asset quality, the stage 3 exposure at default stood at 5.04% as against 5.14 as on 30th September 2021, reflecting a marginal sequential improvement in the same. Total provisions as on 31st December 2021 is 5,715.76 crore reflecting a provisioning cover of about 40% on stage 3. This includes 327.31 for COVID-19 related provisions. Assets recategorized as NPA as per RBI notification dated 12th November 2021 are about 2,497 crore and are placed in stage 1 and stage 2. ECL provision for the same is 230.83 crore. OTR during this quarter stood at about 490.27 crore. It is much lower than the Q2 figure of about 2,141 crore. We have continued to focus on collection efficiency, and the same has shown consistently, and then it has shown very good consistency, and it stands at 99% for all the regular accounts. The overall trend in the collections and recovery side has shown improvements, which gives us a confidence of reduction in coming months. On the funding side, we have witnessed a reduction in overall cost of funds by 7 basis points during Q3 FY22, despite hardening in the bond yields during the same period and 24 basis points during the current financial year. Incremental cost of funds stood at 5.27% for the quarter. Net interest margin for the quarter stood at 2.42% as against 2.36 over the Q3 of FY 2021. For this quarter under review, the interest income increased by 2.55%, whereas the interest expenses declined by 1.37%, leading to margin expansion. Project RED under digitization transformation is progressing significantly with the launch of new projects like KYC and AML solutions, deposits applications, and audit portal. More than 1 million downloads of our HOMI app have been made so far, and the company has approved more than 13,000 crore worth of loans received through this HOMI app. With this brief introduction, I would like to invite you for your queries. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Also, as a reminder, in order to ensure that the management is able to address questions from all participants in this conference call, please limit your questions to 2 per participant. For any further questions, you may come back for a follow-up. The first question is from the line of Rikin Shah from Credit Suisse.
Thank you for the opportunity. I have 4 questions. First one is on the margins. So the margin seems to have normalized this quarter. I wanted to check if there were any write-backs or interest income reversals in this quarter. And also, how does the incremental asset yield look like versus your overall asset yield? And I have also noted that the incremental funding cost has started inching up. So any outlook on the margins? That's one. Second one is on the asset quality. The stage 3 coverage has declined by almost 350 bips to 40%. Is there a target level that you would like to intend to maintain? Third one is on the growth. The LAP, LRD and developer loan books continue to contract. So from here onwards, would you intend to accelerate the disbursements and any outlook from here? And lastly, the data keeping question. Just want to request GNPA by different segments and also outstanding book for restructured loans and ECLBS. Thank you. That's it.
4 questions. 7. Okay, actually, as far as the questions are concerned, of course, me and our CFO both will answer in part and all. Sure. As you are asking about, see the growth, of course, I will tell about the vertical business front if you are looking at. The growth, what we are seeing now in the individual portfolio is really going on very well. And then, of course, I agree, developer book size, ours is not very much, it's only around 6 to 7%. There, what happened, a lot of scope is there for us to expand. In this quarter, we are having some positive outlook on the expansion further on this developer and also LRD books also. And then as far as the asset quality is concerned, you are inquiring that really now after this last quarter, especially momentum was good in the sense people were not like in the earlier year of Q3 where movements were not that much. And even this time what happened, our teams also were in place to meet all the people and then recover the money. And second, what happened, no, most of our loans are actually in the retail segment. Mostly 80% of loans are in the retail segment. In that also more than 70% are in the salaried class. That's why what happened, the regular income levels of people has helped us a lot. That's why our collection efficiency hovering around 99% regular and then more than 70-80% in all cases. So with these things, what happened, there was a very good recovery, especially in the Q3. That gave us a lot of comfort in what happened. The provisioning levels also were maintained to meet all these requirements. Margin.
Yeah, good morning. Regarding the other query pertaining to margins, yes, there has been an improvement in margins year on year. And if you look at sequentially also, if you see the loan asset growth has been around 11%, whereas the NIM growth has been around 13%, 13.5%. So that has translated to a higher net interest margin. There is no one-off here. In fact, there was a reversal which was there in Q2, which is not there now. But this quarter, margins are reflected of the true income from operations and cost of funds. There are no one-offs. As far as the...
Sorry, go ahead, sir.
Sorry?
On the asset yields, incremental asset yields.
I'm coming. I have not finished. You have asked some 5-6 questions. I have noted down. I'm just coming.
Okay.
Yeah. Asset yield, there has been a decline in the asset yield in the initial part of the financial year, but now it is stabilizing, and from January we have also increased our lending rates. So that should help stabilizing the asset yields for incremental business. Incremental cost of fund has been increasing, as you are aware that there has been an overall increase in the cost of funds and I would say the bond yields across the entire system. In fact, in the GSEC also there has been a very sharp increase, but till now it has not fully translated into the higher cost of funds. If you look at the construct of our liability, you will find that about 60-65% of our liabilities are fixed rate in nature. So that certainly allows us some advantage in a increasing interest rate cycle. Regarding that stage 3 cover, that was another question that you had placed. If you now look at, there has been substantial improvement in the coverage across, including the stage 1, stage 2 and stage 3 also. So stage 1, stage 2 coverage has also increased, and stage 3 coverage is also around 40%, which at this point in time it is quite improved as compared to earlier position. Other queries regarding the growth, MD sir has already responded. 2 more queries we had asked regarding some data points. The GNPA, the outstanding, what was the query? It was the outstanding loan.
Restructured loan book and the ECLGS outstanding book.
Restructuring this quarter is only 490 crores.
Correct.
Have I answered all your queries?
And so GNPA by different segments and outstanding.
GNPA in the individual home loan segment is 2.1%. In the project loan, it is 27%. And in the non-housing commercial, it is 15.9%. In non-housing individual, it is 9%. Total coming to 5.04%.
Okay. And so on the ECLGS outstanding book?
What exactly you want, ECL outstanding book?
So what is the total ECLGS disbursements we have made until now?
About, I think, 1,000 crores or so.
Okay, sir. Thank you very much. That answers all my questions.
Thank you. The next question is from the line of Kushan Parekh from HSBC Securities. Please go ahead.
Thanks for taking my question. So just harping again on the NII growth, basically, if you could just give us some additional color in the sense that if you could let us know what the reversal was in 2Q as well as is there any improvement in yields that we are seeing in the individual housing side in 3Q, or any mix change? Have we, if you could elaborate on if we've done more of affordable housing, and at what yields does affordable housing loans come in at? So just wanted to better understand the yield improvement and NII improvement in 3Q.
As I mentioned, there has been reduction in the cost of fund also in the third quarter. Despite the fact that there has been overall increase in the bond yields in the system, there has been improvement in the cost of funds. That also has helped in improving the interest income collection. We have effected an increase in the lending rates also, so that also should give some support and some stability in the asset yields going forward. And as far as the interest income reversal you are talking about, that actually was in the Q2, which had reduced the interest collection in the interest the revenue from operations. There is no reversal in Q3.
So what was
normal collection, normal quarter?
What was the amount of reversal in 2Q?
It was around 350 crores. You will get more reference on my Q2 call transcripts.
Oh, okay. So that okay, and there has been no change in individual housing yields for 3Q, right? And no change in mix as well in terms of within individual housing to affordable or something like that.
No. Affordable is different. Affordable is not this year.
Okay. So this is entirely coming out of the write back of interest reversal that had happened in 2Q, and there are no changes in yields in 3Q. We have hiked rates in Jan only, right? Is my understanding correct?
See, there is again, I think you are mixing it up. There is no reversal in Q3.
No. Yeah. So there was a reversal in 2Q, which is not there in 3Q, is what I'm saying.
Correct.
Okay. And no change in individual home loan yield for 3Q?
No.
Okay, understood. And if you could just help me with the restructured book outstanding number for 3Q. We've done 419 crores in 3Q. Just wanted to know what the outstanding number is now.
Slightly more than 7,000 crores put together.
Okay.
Yeah, correct. That's correct.
That's all from my side. Thank you.
Okay, thank you.
Thank you. The next question is from the line of Abhijit Tibrewal from Motilal Oswal. Please go ahead.
Yes, thanks for taking the question. So, during the opening remarks, I think you have specified this. If you could just repeat this, the amount of loans which are in stage 1 and stage 2 but have been recategorized as NPA under the RBI circular.
Yes, we have already specified it in the opening remarks.
Yeah, we are disclosed whatever we have taken into the book.
Provision is also disclosed.
Yes.
Yes, sir. I wanted to know the amount of these loans. The provisions you have already disclosed in the presentation. What was the quantum of loans?
We'll just repeat it. It is 2,497 crores.
Roughly 2,500 crores we can keep.
Okay. So the second question I had is, what has prompted this change in provisioning policy during the quarter? What I'm trying to understand is, sir, until last quarter we had something like a 3 bits kind of a provision cover on your stage 1 and stage 2 loans, and this quarter you have increased it to about, I think, 38 basis points. So what has 36 basis points in Q3. So what has prompted this change in provisioning policy during the quarter?
No, it is this RBI circular. If you see the RBI notification of 12th November 2021, we have implemented, and pertaining to that, whatever will be the notional provision that is required, we have created that and we have kept it in stage 1 and stage 2.
Okay. Is there such a significant increase in credit risk from just that RBI circular which has prompted this increase from 3 basis points to 36?
230 crores. We have given the number also, 230 crores.
Yeah, 230 crores is a provision made for the exclusively, additional.
Okay. And so lastly, if you could just help us understand, have there been some, let's say, resolutions or prepayments in the developer or builder book? Because, I mean, the runoff in that book during the quarter looks pronounced. So,
Yeah,
any resolution?
there have been some closures. Some repayments have happened.
And what was the quantum of that, sir?
I think some 600-700 crores in totality. There have been some repayments.
Right, sir. And so lastly, you talked about increasing in lending rates from January onwards. By how many basis points have increased your lending rates during January?
It's about 10 basis points.
10 basis points. Thank you, sir. That's all from my side.
Thank you.
Thank you. The next question is from the line of Utsav Gogirwar from ICICI Prudential Life Insurance. Please go ahead.
Thanks for the opportunity, sir. Just to continue with the previous question. So, as per the website, the interest rate is 6.7%. Is this the latest one after increase of 10 basis point, or the new rack rate is 6.8%?
No, it is the latest whatever you are saying, yeah.
6.7% is latest.
6.7 is some category, but it is actually 675.
Yeah, it is linked to the CIBIL. Lot of things are there, no, in that quantum wise and all.
Product categories are also different, yeah.
Sure. And my second question is, if the rack rate for any particular kind of customer is say 6.7 or 6.75%, are we allowed to lend below this rack rate?
No, that is not permitted.
That is not permitted. Okay, perfect. That's it from my side, sir. Thank you.
Okay, right.
Thank you.
Thank you.
The next question is from the line of Umang Shah from Kotak Mutual Fund. Please go ahead.
Yeah, hi. Thanks for the opportunity. Just a couple of questions on provision. So, 230 crores which we have assigned to these assets which have been reclassified as NPLs as per RBI circular. Do you really think is there any need to increase provision cover on these loans, or 230 crores will be sufficient enough?
No, as far as this particular RBI 12th November circular is concerned, we have already applied that, and 230 crores is the number which has been provided for this.
Okay, so the way to look at it is that 230 crores would be incremental. So the total provision against these assets would be higher. Is that the right way of understanding?
Yes, certainly. Some provision will already have been done.
Okay, understood. The second question was that on our stage 3 provision cover, so now I understand that obviously last 4 to 6 quarters have been fairly uncertain for the industry as a whole, but our stage 3 provision cover has also been fairly volatile. So under the ECL model, how should we look at a more steady state sort of a stage 3 provision cover for us?
Yes, certainly, yes. Now, because as you have very rightly said, because in the last 2 years there has been so much of events,
Uncertainty.
and so much of uncertainty, so much of intervention by regulator requiring so much different types of treatment. Now you are now looking at a much more stable provisioning, I would say, overview.
So the current 40% PCR should be like a more sort of a steady state provision cover. Is that a fair understanding?
Yes. It will be at least 40.
At least 40. Okay, understood. Sir, the other question was that have you made any appropriations to the impairment reserve during the 9-month period in the current fiscal?
Current year, as of date, the total impairment reserve provisioning is 297 crores. Total,
okay,
that is the total.
Okay, which would be about 200 odd crores as on the previous fiscal.
Yeah, correct.
Yeah.
Okay. And just the last question from my end, what proportion of our loans would be linked to any sort of a external benchmark like a repo rate or something?
You are talking of the lending side or the borrowing side?
Lending side.
Lending side, it is an internal benchmark, internal PLR benchmark. Now that PLR is also comprised of our internal cost of funds and other administrative cost. So you can say that obviously if there is a movement in the external rates of interest, it will also impact our PLR.
Understood. Okay. All right. Perfect. Thank you so much, and wish you all the best for future quarters.
Thank you.
Thank you, Ma'am.
Thank you. The next question is from the line of Kunal Shah from Carnelian Capital. Please go ahead.
Hi, thank you for the opportunity. I had two questions. One was pertaining to the growth. So, in the current quarter, on a year-on-year basis in the individual housing loan segment, we had a good growth of 15%, and on quarter-on-quarter basis, a good growth of 4%. But however, still we see in comparison to other players who are present in the housing market, their growth was much aggressive on both year-on-year basis and quarter-on-quarter basis. I mean, if I have to name some large private banks, they had growth of northwards of 20%, right? So, and also now we have taken a further rise in the interest rates. So just wanted to understand, is it the competitive intensity that is hampering our growth, or how should we look at growth from year on for LIC Housing Finance?
Yeah, as far as growth is concerned, really you have got a good question. I agree with you. What happened, you see, in the market now, it is very competitive. Because many players are there, even including banks and HFCs, all are playing in that. And of course, looking at the size of our company, what we call growth, if you look at from that parameters, I think it will be more clear. Last year also what happened, Q3 was very heavy because of a lot of pent-up demand in the Q1, Q2 of last year. And then the Q3 also was very heavy. We did nearly more than 17,000 crores in that quarter itself. So over that we have seen the growth of nearly 5% is a good thing in the current year. And then if you look at the overall also, for the other 3 quarters put together, the growth is more than 30-35% now. So in the market, I agree there is a challenge, but now what happened, even though with increased rate of interest, even few basis points, it is up only. In the market, actually, we are having what you call now demand across in all areas. Actually, geographically, tier 2, tier 3, metros, everywhere what happened, our people are really on the field, and with that, our numbers of even channels are doing very well. And all regions are contributing this year. So with that, we are very sure that I think the growth rates will be maintained or further may improve.
Just to add to what MD sir just mentioned, 15% growth on a 2 lakh crore portfolio also on the core home loans where the competition is the most intense. I think this 15% growth on this book we are seeing after many quarters, and despite the so-called competition that you referred to.
But even sir,
hello?
We've lost the line for the current participant. We'll move to the next participant. We take the question from the line of Ashutosh K. Mishra from Ashika Stock Broking. Please go ahead.
My first question is toward the developer loan segment. We have seen good recovery in this quarter, and in the initial comment you also mentioned that you are again start seeing growing this portfolio. So can you put some light on what is happening in this segment? We were the quite large player in this segment, and was positively contributing towards the NIMs few quarter back. So how you really want to take this portfolio again, seeing that our experience?
One thing actually, I think our developer book size, you are aware that it is hovering around 6 to 7%. Because what happened, of course, after COVID, there are a lot of what you call delay, and also somewhere the projects were not taking off very well, and activities were slowed down almost over there. Now I think slightly there is a recovery. So we also what you call now have focused a lot on this one, and already we got a good number of proposals with us across some different towns, cities and all. So going ahead, I think there will be good expansion even in these projects in the developer loan book also with us in the last quarter of current year. We also look for actually even other places, even other loans like commercial lab or even some LRDs and all, which can yield actually better margins for us.
So what is the current incremental yield on the developer and the lab portfolio, if you can just put forward compared to the home loan where we are seeing the competition, what incremental yield we are getting in these 2 other portfolios just mentioned?
In the builder loans, developer loans around say 12%, 12 to 12, maybe 13% max. And in the loan against property, it will be ballpark around 9.5 to 10.5, depending upon the rating.
Okay. Sir, another question is, you just mentioned that we have seen the sharp improvement in NIMs and the OTR number. What was the OTR number in the last quarter, and what is the OTR number in this quarter? So, because I think this is a large change in, and that may have impacted the NIMs in the quarter.
September, you're asking for September and
September.
September the figure was 2,141 crores.
Correct.
2,141 crores in September quarter.
Okay.
This quarter, that is December quarter, is 490.
Okay. And that interest reversal was of 350 crore was mainly toward that OTR, if I can assume.
In the Q2.
Yeah, in the Q2. Yes.
Yeah.
Okay. And on a cost of fund side, how much increase do you anticipate in the next 6 months, given the way things are changing at this point of time?
The cost of fund, there is a very strong likelihood of Reserve Bank action on reverse repo or repo. Part of it has already been priced into the markets, the bond yields, but it has not affected too much on the longer end of the curve. It is the medium and the shorter end of the curve which has been impacted most. So if you look at the construct of our liabilities, where about 60% plus of the liabilities are fixed rate in nature, that will certainly help us to cushion some of the initial increases.
Okay.
And again, if you place it in perspective, the cost of fund has been, the bond yields have been hardening since October. But in the Q3 also, we have been able to get about a 7 basis points reduction in the cost of funds on a more than 2 lakh crore of liability portfolio.
Mm-hmm. Got it. Okay. And sir, last question is, any more large recovery coming from the developer segment in the fourth quarter or so? Are you expecting something like that there?
Yeah, few are there in pipeline. We are all working out. Let us see how it goes, because some are legal, some are even these things are there because developer books. Of course, may not be a very bigger size in volume, each single case like that, but all put together, it will be somewhat. Actually, the volume will be a good size.
Okay, something like what we have done in this quarter.
No, it may be better than this quarter also, what we feel.
Okay. Got it. Thank you, sir.
Thank you. The next question is from the line of Nidhesh Jain from Investec. Please go ahead.
Thanks for the opportunity, sir. On the LCR, was there any impact on our margins or profitability in this quarter because of LCR norms?
No, actually not. We had buffered up for the LCR in advance, so there was not too much of an impact there. And we have also disclosed it in the published numbers. You can see the LCR is more than 200%, and we have been able to, create adequate buffers. No problems on that count.
We are fully compliant with that.
Fully compliant, yeah.
Sure. And so can you share stage 2 number for both individual housing as well as individual non-housing portfolio?
Stage 2 numbers for individual housing loan is 5,662 crores. 5,600 crores.
600. Okay, sure.
5,662 crores. Huh? And the total you already have, so you can just take it out.
Okay, sure. Thank you, sir. Thank you.
Thank you. The next question is from the line of Sachin Chawatan from Kotak Securities. Please go ahead.
Yeah, hi. This is Nischint here. My questions are answered. Thank you.
Thank you.
Yeah.
Thank you.
Thank you.
The next question is from the line of Kunal Shah from ICICI Securities. Please go ahead.
Yeah. Hi. Congratulations for good set of numbers. So, firstly, in terms of the corporate recovery, almost 1,500 crores of repayments have been there this quarter. Any impact of that in terms of maybe the recoveries wherein interest would have also come back and we would have booked something out there which is reflecting in NIMs, or it is pure principal repayment and no one-off on the corporate side at all?
No, it is mostly interest. It's just a principal closure, principal repayment, you can say.
Okay, so nothing in terms of either maybe interest or something which would have nothing of that sort.
Nothing
of that. And corporate developer NPAs would have gone up by 130 odd crores or so during the quarter. I think 27% suggests that there is.
There is actually the denominator has come down. No.
Loan book.
No. Even on the denominator. Maybe compared to 24 odd percent, so 3650 goes up to 3,800 crores. So just want to check if there is any further slippage as well, which has happened during the quarter, because that seems to be 150 odd crores kind of an addition.
So the total stage 3 and the project loan is 3972 crores.
3972 crores. And in September 21, how much was it?
It was around 3,900 only.
Okay. So no increase as such.
No.
Okay. Sure. And so lastly, in terms of the overall, apart from whatever was required under the RBI, there is further inch up which is there in terms of the provisioning under stage 1 and stage 2 put together is almost like now 830 odd crores. So would there be like further increase we will keep on creating the buffer under stage 1 and stage 2 going forward as well, or we are more or less adequately covered now?
It is done.
Whatever is required is everything.
Yes.
No, because our books are mostly in the retail segment. Retail segment, what is happening now? Recoveries are good. Then
recoveries are coming up.
So now the even COVID impact, all these things are slightly now fading out. So I think that will give the more or less same stability for us.
Sure. Okay. Yeah. Thank you.
Thank you. The next question is from the line of Rikin Shah from Credit Suisse. Please go ahead.
Just a clarification, sir. Have there been any restructured accounts that have come out of the restructured portfolio? Because as of last quarter, the outstanding book seemed to be around 7,300 crores, and in one of the earlier questions you mentioned it's just slightly above 7,000 crores now. So that's one.
There has been no restructuring coming out.
But if there was additional restructuring of 490, so if there is additional restructuring and no account has come out, how would it be same sequentially?
No, sequentially it is not same. I'm not able to understand. Total put together will be around 7,500. That was the number I had taken, 7,100 plus 400 odd.
Okay, understood. And last quarter you had also given...
If you want the exact number, 7,471 or 7,000 something like that.
Okay, that is helpful. And last quarter you had also given some split on the breakdown of this restructured between some segments. Possible to furnish it this quarter?
I think it is given in the disclosures to the notes to accounts. There is a table which is appended below.
Okay, we'll have a look, sir. Thank you.
Yeah, that gives all things. Yeah, correct.
Thank you. The next question is from the line of Param Subramanian from Macquarie. Please go ahead.
Yeah, hi. Thank you for the opportunity. I wanted to ask on the BT out this quarter, is there any uptick because the prepayment that you've mentioned in the presentation that has gone up half year versus 9 months? So that's my first question. And secondly, on the loan book side, how regularly, as in how frequently does the loan book reprice since it's 99% floating? So for example, if RBI were to raise the repo rates by 25 bits at the next meeting, how long before the entire loan book on the loan side reprices? Yeah, those were my two questions.
So this will be a quarterly review which will happen. It will be a quarterly review which will happen.
On the loan book side, so the entire if the benchmark gets raised by say 25 basis points, including the outstanding loan book, everything will reprice. As in how long before the entire loan book reprices?
As I told you, quarterly depends upon when the Reserve Bank is going to increase.
Okay. And my other question on prepayment.
What will be the consequent impact of that on the cost of fund? That also is to be seen. Sometimes it might so happen that even without the repo or the reverse repo action, there could be an increase which might require us to revise the review the PLR and revise it accordingly.
Got it. And my other question on the prepayment. So there is an uptick.
Prepayment more or less remains stable on the individual side. In the non-individual project loan side, there has been slightly higher prepayments.
No, so I'm looking at the presentation on the individual home loan slide. It's gone up. Prepayment 9 months is 10.8%, and if I look at it half year, it used to be 9.9.
No, it is
hovering around 10%.
Around 10% mostly.
Around 10% is the individual. That is even earlier quarters also were there. Pre-COVID levels also more or less same.
Yeah. It was 10.8 only, and on an annual basis, I think it was 10.5.
It hovers around 10%.
On a full year basis, it will generally be between 10 to 11.
Correct.
On a full year basis.
Got it. So there is nothing special in terms of BT out in this quarter.
If you see part of the first half, if you see 2 months, there was almost a stoppage of business activities.
Right.
Due to the second wave, there was almost a stoppage of business activities in the first 2 months. That is April and major part of May.
Correct.
So at that time the offices were also closed. In fact, there was no business activity. People didn't prepay or things like that. So to that extent, that particular 6-month period might be skewed. Now, if you look at a full year of last year, that will give you a much more stable and comparable base.
Got it. Fair enough. Thanks for those answers. All the best. Thank you.
Thank you. The next question is from the line of Vikram Subramaniam from Spark Capital. Please go ahead.
Hi, sir. Congrats on the good set of numbers.
Thank you.
And you had explained about the margin increase because of the reduction in the OTR run rate. But with restructuring still happening, how do we see restructuring as well as NPAs trending going forward? Like in individual home loans, last time we had 2.25 and now it's 2.1. Can we expect any sharp correction, in the coming few quarters, both in the individual and any chunky resolutions or recoveries in the builder book? Is that possible? Any color on that?
No, individual, actually what you said is correct. Now what happened, actually recoveries are good. And with that, what happened in the individual book size, even people who took earlier what you call either moratorium or OTR, now they are slowly coming out of that. We have got a special task force only for that. So what happened now, people can come out of that also. That is giving good edge for us. So that's why slowly there is an improvement in that as far as the individual retail loans are concerned. In the developer book also what happened now, because slowly there is now momentum, then projects are taking off, then sales are happening across. So we see there will be some sort of reversal even in the developer book also. Those cases and OTR slightly can be better off in this quarter.
The overall visibility is much stronger today as compared to 6 months back. That is for sure.
Okay, got it, sir. And can you please share how much of quantum of loans that came out of OTR during the quarter? You said 490 crore during the quarter OTR being made, but how much would have come off normalized?
Nothing has now normalized because most of them are still within the OTR framework of the moratorium. It has not come out. It will start coming out. Maybe most of the people who had taken the OTR had taken it between say 1.5 to 2 years, maybe 1 to 2 years, and that period will start maybe about 6 months from now.
Got it. 1 to 2 years.
6 months to 12 months from now.
6 months to 12 months from now. Got it. One final question. Now most of our loans are floating rate basis. If and when the benchmark rates start increasing, when do we see first set of resetting? How often is the reset?
See, it is difficult to give an exact date because obviously the central bank is yet to come out with their policy announcements. But my guess is that it will not be very long, maybe anywhere between say maybe couple of months, we can say. It is likely to happen across the industry. It is not the first time it is happening. It has happened earlier also several times in the past. 2-3 years back in the past also it has happened. So this is a regular phenomenon, and it will happen.
I meant in our portfolio, when does the reset happen? If rates go up, when do
every quarter.
Every quarter, the reset happens every quarter. It reflects for the customers every quarter, is that?
Every quarter.
Okay, got it. Thank you.
Thank you. The next question is from the line of Piran Engineer from CLSA. Please go ahead.
Yeah, hi, good afternoon. So my first question is basically on SARFAESI. In the last 1 to 2 years, SARFAESI has been pretty slow. Just want to know how has it picked up now, and how much of our resolutions in home loan and LAP in the past 2 quarters have been due to SARFAESI?
Due to
SARFAESI.
SARFAESI and all. Okay. No, SARFAESI actions, of course, you are aware. Last year, what happened because of COVID, of course, there was some sort of no takeoff, in the sense activities were not that much enforceable, no, almost all. So that what happened now in this quarter, slowly it has picked up. Now it is coming to actually almost all 70-80% of our earlier what we call pre-COVID levels in SARFAESI activities also. I think going ahead, once we restore the full, I think there will be good success like in the past.
Okay, so typically what percentage of our individual NPLs would we invoke SARFAESI in? Like out of 100 NPL accounts?
Individual side,
In the individual side, yes.
Yeah, all of course depends, because now people can come for OTS, they can also come out of that, even they can repay, all these things are there involved. I think may not be very heavy. What I feel, I think pre-COVID levels also we used to hardly, maybe around 15-16% range would be there.
Okay. In the SARFAESI, especially in the retail customer segment, the issuance of a notice under section 13/2 itself brings forth action from the part of the borrower. So many times you may not actually even have to take it to the level of an auction.
Okay, got it. Sir, my next question is on yield. So I just want to understand this properly. We've increased it from Jan 1st. Firstly, is it increased only for the incremental disbursement post Jan 1st? Secondly, has competition also done it? And thirdly, just before Dussehra, we had a sort of an interest, festival offer of 6.6%. So is it just that, and that was till 31st December. So is it just that festival offer has gone and optically the yields look higher? Have we just withdrawn that?
No. Before the offer, the rates were different. The offer, the rate was for 6.66, and after the offer, we have increased the lending rates for the new loans from first week of January. It is not a removal of an offer.
Okay, but the old book has also got
other changes also internally in different segments, in different loan slabs also, product categories also, there have been changes made. It is not a removal of an offer.
Got it. But has the old book also been repriced by 10 bits?
No, not yet.
Okay, and are we seeing competition start to do that?
See, we have taken an independent view depending upon our own perception of the market and our own growth trajectory. We have taken an independent decision. It is possible that some players might have taken or may not have taken.
Okay, got it. That's all from my end. Thank you, sir, and all the best.
Thank you.
Thank you.
The next question is from the line of Abhishek Khanna from Jeffries. Please go ahead.
Good afternoon, sir. So this is Prakhar. Just a couple of questions. First, just if I could clarify that, of this credit cost during the quarter of about 350 odd crores, is it possible to help to break it up between what is any of the one-time here, because let's say if the 490 odd crores of restructuring done this quarter may have attracted a 10% provision, any of the reclassification cost of 230 crores if it was done through the P&L this quarter. So what is basically the business as usual part of the 355 crores and what is the one-time part of the 355 crores?
So you can say that the 230 crores that has been created because of the RBI provisioning requirement or the RBI circular, that is something which is for the first time. It is obviously not done earlier. This is the first time that the circular has also been implemented. So apart from that, everything will be normal.
Even the restructuring wasn't done this time, that 49 odd crores in case you have to make a 10% provision on 490 crores?
That has been done earlier also, no? Restructuring, provisioning related to restructuring had been done in previous quarters also.
No, I know, but so that 49 crores would be part of the 355 crores, right? Is that fair to understand?
Correct. Yes.
Understood. And on the project loan repayments that you mentioned, 600, 700 crores, fair to assume that they were all stage 1 type of loans, right? Because it's basically repayment of, because the stage 3 within project loans has a decline and they practically paid just the principal. So they were probably good quality loans only.
Mostly stage 1, but could be stage 2 also.
Okay, understood. Perfect. And last thing is, just a little bit forward looking, historically, fourth quarter for LIC tends to be a stronger quarter in terms of, even NII recognition, partly because some of the overdue accounts, etc., come and pay back. Would it be fair to assume that pattern is likely to continue, or would things have normalized?
It is difficult to actually give you any number. To be very honest, you are asking for a number, so I cannot give a number. It is forward-looking. But yes, certainly we can say that margin stability will be there for sure. And typically fourth quarter is the best quarter in terms of business. It is the best quarter for recoveries as well.
Perfect. Thank you, Sudhir. Thank you, sir.
Thank you.
Thank you. Thank you.
Thank you. The next question is from the line of Akhil Harzi from Robocapital. Please go ahead.
Hello. Good afternoon. Am I audible?
Yeah, audible. Good afternoon.
So I just want to know, what is the normalized credit cost for the company?
The normalized credit cost in the last 2 years, I can just share with you. FY20 was 48 basis points. FY21 was 60 basis points. And currently, if you see in the first half of the year, it was very high, more than 100 basis points. Q3 credit cost has come back to 60 basis points.
Okay. And going ahead, are you planning on keeping it below the 1% then?
Yeah, certainly. Certainly.
Oh, okay. Okay, thank you. That's it from me.
Thank you. The next question is from the line of Mayank Gulgulia from SUD Life. Please go ahead.
Yeah. Hi, sir. Our loan book is linked to...
आपण ज्या व्यक्तीसोबत बोलत आहात त्या व्यक्तीने आपला कॉल होल्डवर ठेवला आहे. कृपया लाईनवर...
Hello. Sorry, there are some disturbance. Yeah, please tell again, sir.
Yeah. So our loan book, which is floating, it's linked to BPLR. So whether it is BPLR is linked to marginal cost of fund or average cost of fund?
Now, what is LHPLR?
No, that is LHPLR is linked with the marginal cost of fund also has got a weightage. I will put it this way. It is not purely on the marginal cost of funds, but marginal cost of fund has got a replacement cost impact.
Okay. So greater weightage is for marginal cost of fund or average cost of fund?
No, it is marginal.
Okay, understood. And 30% of our borrowing is from banks and NHB. So is it fair to assume that this portion of borrowing would be linked to repo rate?
Some of them are with the external benchmark like T-bill also.
Okay, but most of it would be like either T-bill or repo rate.
Yes.
Okay. Thanks a lot. Thank you.
Thank you.
Thank you. Ladies and gentlemen, we take the last question from the line of Kunal Shah from ICICI Securities. Please go ahead.
Yeah, thanks for taking the question again. So on restructuring, you said there are no reversals, but I assume we are not accruing interest on the restructuring the way we have reversed it in the previous 2 quarters. 500 crores interest would also have got reversed in this quarter as well, maybe for the entire...
It is not there.
It is not
Whatever
there?
has happened in Q2 itself is done and finished.
Okay. So incremental restructuring which was there, that is there is no reversals which have happened in this one.
There is no further restructuring, circular or instruction from Government of India. It has stopped, you know that. From RBI.
No, the pending which was there, okay, which would have got implemented.
Even that implementation period is over.
Yeah, okay. And lastly, in terms of the outstanding restructured pool, so 5,000 is corporate and balance is individual. But within individual, can you give how much would be home loans and how much would be left?
I don't have the full details right now. I can just.
But majority will be in the as far as restructuring is concerned. Because our loan book, if you see 80% is individual only into that. No.
Yeah. No, if there is any difference in terms of maybe left or maybe individual non-home loans are there, so just wanted to get that sense. Yeah.
No
result. Okay, I'll take it from you separately. Okay. Yeah. Thank you. Yeah.
Thank you, Kunal.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments.
Yeah, I thank every one of you for giving this opportunity once again. Friends, actually, we look forward for a very, very positive and then very strong Q4. And the company is fully geared up. All my team members across the country are fully working in tandem with all our goals. All the recovery people are also putting their best. So going forward, we look forward for a very good double-digit growth as far as things are concerned. Then at least, then again, recovery also will be very strong enough to bring down the our NPL levels for than the expected levels. With all these things, the company will be in a position to close the financial year on a very sound footing. And on behalf of the entire team here, I also thank you for giving this chance to meet every one of you. Thank you. Wish you all the best.
Thank you very much, sir.
Thank you.
Ladies and gentlemen, on behalf of Axis Capital Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.